friends, welcome to Nirmal. I'm Piyush Jain, and today we are bringing to you a conversation which is going to be a part of a series of budget review conversations. And in this conversation, we are going to take a look at what the taxation proposals have come from the budget, from the Finance Minister, Ms. Nirmala Sitharaman. And to take this conversation further, let me now welcome our guest today, Mr. T.P. Ostwal, a renowned domestic and international tax expert. Mr. Ostwal, welcome to the show.
Thank you.
Now, yes, and there are a couple of things I think which we would like to ask you, but let's go let's try and ask you step by step. From the first perspective, we have actually seen a sort of a revision, and I would actually say that I'll come to the income tax slabs later. So I'm actually going to the first question on the insurance first here. We have seen the income from insurance policies where actually the income is above 5 lakh rupees, it has now been made taxable. So, as per you, what actually would have been the reason for this?
It is not the income, it is the premium. If premium payable on insurance policy is more than 5 lakhs of rupees per annum, then any amount which you receive on maturity is taxable in your hand. So therefore, if your premium is less than 4,95,000, 99,000 or up to 499, yes, the premium, the maturity value will be exempted under section 1010D. And this policy, this will apply to even foreign insurance also. And therefore, all type of insurances when you receive on maturity was not subject to tax. Now they have brought that they have removed the exemption for the insurances where your premiums are more than 5 lakhs of rupees.
So, Mr. Oswal, according to you, what would have been the reason, why the government would have done it?
You see, people are paying insurance premiums, all high net worth individuals, they are paying huge premium. There are 2-3 products insurance companies have. One is, and the schemes are prevalent and they are being sold like by wealth managers. And they say, okay, you in the first year you pay 25 lakhs or 1 crore rupees, or for 3 years you pay 1 crore rupees, and from 10th year onward you will get 1 crore rupees onward. So therefore, maturity value, the repayment value is in terms of the section 1010D is complying. The payment is made for a policy of 10 years. Whereas the payment is made only in 2 years initially. And later on, you go on receiving 1 crore rupees every year. It means it's not taxable. And these are the schemes which were being sold by wealth managers. And therefore, the government came out with them. These are mainly by high net worth individuals. And second thing, in the process, they have even picked up the normal insurance also. These are the schemes which are going on, and they have picked up even any insurance premium when you are paying on a policy a premium more than 5 lakhs of rupees, you are caught now. That has gone. The deduction, forget the deduction, but everything on a maturity will become taxable unless the maturity value you receive on the death. If you receive money on the death, then the successor, your legal heir will not be taxable on that.
Right. So fair to say it was a loophole, or we should say it was a sort of deduction which the government has plugged for better tax efficiency.
The people were planning this, the insurance product was getting planned and worked out on that basis, and the schemes were getting sold. In fact, a lot of insurance companies came to us. Some came for tax advice, some came to even sell the insurance product. We gave the advice, but we did not buy any policies on that.
Okay, and this was a market mover. We actually saw a lot of insurance.
Apart from this one, another victim is this. Under the new income tax regime, which they have come out with the high rates of slab rate of tax, which was also there to popularize this new scheme of the income tax regime, which was not getting popularized. Last 2 years, hardly few people have filed the tax return.
Absolutely, sir. I was taking a look at the numbers. Only 5 lakh filers had adopted that. And when you take a look at the total filer numbers in crores, I think, as you're saying, it was not successful.
It was certainly not successful because it was not attractive at all. And therefore, now what the government has done it, to make it attractive, they thought that they will work out a scheme whereby you pay income tax at the rate of say 10% if your income is up to 30 lakhs of rupees. You will pay only 1.5 lakh as a tax, because if you're up to 15 lakhs, I'm sorry, 30 not 30, 15 lakhs. So you pay only 1.5 lakhs of rupees tax. Therefore, if your effective tax rate is only 10%. But in the process, what happened? They said we will not get any deduction under Chapter 6A. So therefore, you will not get any deduction under Section 80C. When you are paying life insurance premium, public provident fund, pension fund, housing loan repayment, or housing loan interest, everything was subject to deduction under Section 180C up to 1,50,000. That has also gone. The impact of this amendment, and that is one of the most side effect is very severe. The at least 1.5 lakh rupees exemption or deduction they should have continued. And it may be oversight. It might, I can't say, but representation will have to go to the government. And this government is very difficult to budge. They are not rethinker on the subject. They say whatever we have decided, we will go by that. And therefore, the victim of all these amendments, insurance sector, was beaten badly in the market today. You can see that.
Yes.
This is
Yes.
mainly because of these two provisions. One is 5 lakh and plus insurance premium, and second is this Aam Aadmi ka normal insurance also getting affected by that.
Right, and just continuing on that, sir, like on a new regime and the old regime, and I think this is something which even our viewers, the retail investors, and everybody actually is going to keep calculating in their mind. If somebody actually was paying tax last year as per the old tax regime, aren't they better off staying in that regime versus actually coming into the new tax regime?
No, first of all, let me clarify. If you are a businessman having a business or professional income, and you have opted for new regime, you cannot go back on the old regime. So that was one biggest disadvantage. I don't know what was the logic in doing all these things, but nevertheless, we can't question the logic of the government. They have done it. Second thing, if you are a salaried employee and no business income, you can switch over, whether it is beneficial this way or that way, from old regime to new regime to old regime.
Okay.
Now let us come to the new regime and old regime in the past. Why it was not successful? Because people found it has no advantages available.
Absolutely.
On the contrary, disadvantages. So therefore, people thought that we will not go for, and they were going continue. To make it attractive, they have said, and still this is though attractive partially, and though the disadvantages also got caught in this. Of course, one is that they have clarified that the standard deduction for salaried employees will increase to, even under the old new regime, up to 52,000. So therefore, 52,500. So that deduction is available. But the rate of tax they have brought in from 0 to 3 lakhs, nil rate of tax, 3 lakh to 6 lakhs, 5%, 6 lakhs to 9 lakhs rupees, 10%. I don't know whose thinking is, bureaucracy always thinks very chicken-heartedly, and that's why they have brought into so many slabs. They could have brought simple one slab up to 10 lakh of rupees X rate, and beyond 10 lakhs of rupees up to 15 lakhs Y rate. And they could have calculated and worked out properly. There is no reason why we are not interested in saving some tax. We will be paying full tax. But so many calculations, who will do this? And therefore, from 9 lakh to 12 lakh, 15%, 15 to 12 to 15, 20%, and above 15 lakh, 30%. I think this was becoming very draconian calculation. And then they say no other deductions, but there was a relief provided, a rebate was available in case marginal relief we call. If your income is up to 7 lakhs of rupees and the tax payable amounts to a particular value under Section 87A, then that rebate was available, and that rebate will continue to be available, and therefore you can claim yourself to be not taxable up to 7 lakhs. But beyond that, you will be paying that full tax.
And as per my, please correct me if I'm wrong, as per what I was calculating, it appeared to me that if I was looking really for not saving much and really sort of going out and spending, and or if I was a very young age, I've just joined in some company, from a consumption aspect, new regime perhaps could be showing me some good sort of signs. But if I was an established sort of middle-aged salaried employee or again basically a sort of high net worth individual, the old regime is still offering me incentives, right, sir?
Till tomorrow, we'll wait for that. Otherwise, honestly speaking, we are working out. Calculations are going on in our office.
Okay.
But as per the old scheme, under the before budget, the old regime was definitely better than the new regime. Second thing, suppose you are a benevolent person, you want to give donation to somebody, some charity, that donation also is not deductible in case of any. In the old regime, at least you can claim 50% of the donations as the exemption, because sometimes people have charitable trusts within the family and they want to
Absolutely.
contribute and take the ATG deduction. That also is not available.
Yes, and I know a couple of them again. Basically, they would be really thinking about the trust here. Moving to my next question, and this is related to the property purchase, and we also basically came to know that capital gains in excess of 10 crores now actually cannot be used to avail exemption via property purchase, and this is a straight hit on HNIs because this bracket actually goes slightly to the luxury properties, and if you're actually in top metro cities, maybe in Mumbai, then very upper middle class properties. I can't say even middle class. Like it should be HNI segment here. What's your takeaway on that?
Why HNI segment? For example, in an old family staying in a Valkeshwar, for years together he was holding a property, and if he sells it because the family has grown and they want to move out to a suburbs in Borivali and buy 2 or 3 houses for all the children separately, the value of the property will be more than 10 crore rupees when you sell it. And therefore there will be impact on that. And therefore this is one provision not very thoughtfully worked out. I think it is hitting a lot of middle class families because the values of the properties have gone up, and particularly there are a lot of confusion which we are working out on that. If there is a joint development, if suppose there is a family owning 3 or 4 flats together, and the value of that goes up more than 10 crore. If you are giving joint development together, then of course value will exceed 10 crore. Otherwise, you go on selling every year a property less than 10 crore, separate properties, and then you can claim exemption. And therefore, these provisions have not been thoughtfully done. It's a bureaucratic mind which always think that the taxpayer is really scoundrel taking advantage of the law. That is not intention of the law. But how can this be an intention of law to not grant deduction? The Income Tax Act has been in the statute for last 60 years, 70 years. How can all of a sudden intention of law changes? The intention of law is not based on the person who drafts the law. It has to be originally thought of at the time of, because intention is never reflected in any books which are published. And therefore, this is very badly done amendment, but nevertheless, it is an amendment, and I don't think this government will budge, because 2 years before also the similar amendment was made. They have restricted capital gain to a particular value under Section 54, and now this has been further proviso added there this year.
Right, and this is I think this is something which, from a stock aspect, I think was related to a couple of luxury real estate players also today. So I think
real estate, the large real estate players will also get affected because of this. But
absolutely, sir.
But they will get affected only in case if suppose somebody want to sell all other assets and buy real estate, then the capital gain tax in respect of other assets was long-term capital gain 20%. But if you are selling listed company shares and buying the house, the long-term capital gain on account of the listed company share was only 10%. And therefore, you are saving 10% because of that you are buying a new house. And therefore, possibly a very high net worth individual buying a property worth 100 crore may not bother about 10 crore rupees capital gain tax. And he will buying a house for him is a priority, and he will buy a house rather than paying the capital gain tax. But however, it will happen.
Then are you saying that basically from a very high value property, this might not affect the decision primarily because of propensity to buy? Is that what you're saying?
Yeah. Who are buying? There's those who are selling their stake in the company, which has gone up substantially. Private equity buyers, private equity owners buy this share stake, and that's why he get a liquidity. And where to dispose of this liquidity? He does not have end use of the money immediately. So he at least buys one house as a status symbol in a topmost building or a good building. But this will impact the real estate player rather than the taxpayer.
Right. That's a practical answer. But Will how do you see the impact coming for the real estate company? Will it be on sort of pricing which they will have to think about? How do you think about that?
I don't think they will bother about the pricing. They may keeping in mind the buyer will negotiate. See, I am now paying capital gain tax. Reduce something, and if the market is a seller's market, the builder may not bother. If it is a buyer's market, yes, the builder will have to come down and reduce the price and negotiate it. So therefore, it all depends upon the market condition in each of the sector.
Right, and also in which pocket actually the property is. So
Correct.
that's the important point here. Let's also talk about the short term capital gain tax, which has been introduced on market linked debentures, a very popular instrument, and I know a couple of institutions which have been very successful in this. What do you make out of it? Why perhaps this was being introduced? Was it to do some sort of a parity taxation? And what
Again,
impact would be actually because of this?
Again, it was a tax planning technique wealth managers have created. They were selling debentures linked with the market linked debentures and saying that this is an instrument which is akin to equity and therefore pay capital gain tax or don't pay capital gain tax or work out long term capital gain tax based on the indexation and this and that. I think they have now considered this to be not an equity and therefore it will be a short term capital gain and all the sale proceeds therefore will be treated as short term capital gain. And this is again high net worth individuals working out the planning, the wealth managers selling this product, and that government found the lead loophole and they have plugged it. And this has come to the attention of the government because now you know very well the income tax returns are getting filed on a digital mode. So all the information about the taxpayer is available across just on a click of button to the bureaucrats who are monitoring this and filing, preparing the budget. So when they know that people started doing all this technique, they immediately plugged it. And this was not a very old technique, 3-4 years old technique. Otherwise, budget amendment generally would take 15-20 years to come out with an amendment. But this has very quickly been done.
Yeah, and in fact, I actually heard from the Mutual Industry Association also. Again, they had also actually brought this sort of to the Finance Ministry from the perspective of some modifications or amendments here. Is it sort of similar to what we also saw as a sort of redemption of debt? We actually are also now seeing it as a taxable. Like if I, on the whole, combine everything, whether it's insurance policy, premium we just talked about, marketing debentures, we also talked about right now capital gains, and I'm also asking you from redemption of debt perspective, is this all jugglery done by the government primarily to plug the loopholes, or and is it really going to be useful for them?
These are all juggleries done by high net worth individual along with the wealth manager and government has plugged them.
Okay, so that's an entire summary. Yeah. Absolutely. So, and now from this, and now also let's discuss IFSC sort of regime, where the government has been trying slowly and slowly to really popularize it as an international sort of destination. Any sort of takeaways from what sort of few announcements which have been made there?
See, if I heard when I heard the budget, I found the provisions were very sensitive and very correctly thought about. But later on, when I look at the provisions of the budget, I have yet to see what I thought was exactly coming out here. You see, why Ireland is a very popular destination for airlines leasing companies because not only it is a low tax country, they give exemption for the airlines leasing to the foreign airlines, but the regime, the legal system of that country is so robust, and the dispute resolutions happens so quickly. Within 1 month, you get a resolution of dispute. Otherwise, in India, you can see that if you have a litigation going on in the Supreme Court, it takes 30 years. Or arbitration also takes 15 years. And therefore, against even after arbitration, people go to the court and litigate it. And this is not acceptable to the international investors. And that was the reason why the government possibly wanted to make the GIFT City more robust from the perspective of the compliance, legal provisions. But I would take the view that even they should have, still it will not be very popular unless the government comes out with a legal system of that in the gift city more robust and clear. Or arbitration also, there should be a separate wing deciding these arbitration matters very quickly. And the matter should be further said that there will be no appeal against that arbitration decision. And if that happens, possibly this the regime will be very good, and people will take advantage of the regime. But what they have done it under the Income Tax Act, they have said it very clearly. If the foreign institutional investor or relocates itself to a gift city or IFSC, then that will be up to 31st March 2025. They have permitted extension of tax benefit even if you have shifted up to this date. And therefore, this is to attract more and more investors, more and more players to go and set up your business in gift city. But I think the overall, my opinion is, why give only 1 year or 2 years? Give 5 years. Gift city is still not that very popular.
Absolutely.
To make it very popular, they should say that in next 5 years you will get the advantage. But the government, as you know, every year they will come out with 1 year, then they will extend for another year, then the extension of another year. So this will go on for 4-5 years. But
yeah, because as you're saying, if Dubai actually had thought like this, then European sort of managers and trading houses would not have shifted to Dubai. Like, there has to be a long-term sort of vision, because nobody thinks like, let's shift for a year and then we'll again shift. As you're just saying, I think the policy visibility should be really long-term.
no, we are advising a lot of airlines companies, and we find that why people prefer Ireland, because legal system is good, drafting legal documents lawyers are available, the courts are very robust, airline specific related businesses, all advisors in respect of technical advisors other than lawyers also are available in that country. Whereas in our country, still the atmosphere has to develop. And if that be the case, the government should really consider a long-term view on the subject rather than only 3 year, 1 year or 2 years, something like that.
Absolutely. So, a point I think for the government to really ponder about here. From this, let's talk holistically, overall from the budget, from taxation point of view, from a holistic point of view. What has been your key takeaways, and perhaps how actually you'd be rating the budget?
Well, key takeaway is the rich has been taxed. Little exemption has been given on one hand, whereas a lot of other benefits were taken away, like MLD or insurance premium, 54, 54F exemptions. REITs now, which were not taxable, which was taxable, not taxable in both the hands, in the hands of the REIT as well as in the hands of the investor. Now they have plugged that, and therefore only investor will be tax exempt or REIT will be exempt, but investor will be taxed. So therefore, these are all major changes as far as high net worth individuals are concerned. As far as middle class is concerned, there are a lot of hopes which have been given, and some benefits have also been given. For example, leave encashment benefit on retirement. Up to 25 lakhs of rupees, if you get a leave encashment benefit, you are working hard, not drawing any, not taking leave, accumulating your leave salary, and then withdrawing at the time of retirement. It is exempted in your hand, 25 lakhs of rupees. So gratuity 20 lakhs, leave encashment 25 lakhs, 45 lakhs of rupees you withdraw at the time of retirement. You will not pay a single penny tax. Assume the rate of tax is 30%. Assuming surcharge is not there, even then the benefit will be 12.5 lakhs rupees. For the people who are in the middle class, this is a great benefit in my opinion, which people would definitely think that this benefit is worth considering. Further, if you look at, there are changes which have been made on a presumptive taxation system, where the turnover, if it is not exceeding 3 crore and 75 lakhs, your tax audit is not applicable. Beneficial provisions which have been introduced on a presumptive tax basis. If you are an MSME, the payment made to MSME, delayed payment made to an MSME beyond that year is not deductible in the year in which payment is accrued in your books of account, but deferred into the next year. So welcome for the MSME, and therefore cash basis payment will be allowed. Certain benefits which they are extended to the cooperative societies if you set up new manufacturing plant up to 31st March 2024. I suppose again this is not workable. You cannot set up a big plant, though you are a cooperative society. Even a sugar factory you want to set up within 1 year, nothing can happen. And therefore, I think the benefit should have been extended for 5 years or so. Startup, they have given benefit. The loss is allowed to be carried forward up to 10 years instead of 4 years. That is a major change. And charitable trust, government has been very uncharitable in making amendments. And this year also you have got a huge number of amendments. And every year this is happening. Supreme Court also is not very favorable to the charitable trust. And the government on the top of it, we thought that government possibly will reconsider the Supreme Court decision in the case of that Ahmedabad cooperative and urban cooperative, urban charitable trust. Unfortunately, there is no whisper about it, but other amendments are to plug the loopholes that government feel it is a loophole. So, on the contrary, if suppose a person is not getting any deduction under Section 80G for contribution to the charitable trust under the new regime, why it should be taxed in the hands of I am paying my taxed money to a charity. So why it should be taxed and why should it be dealt with uncharitably? I would take the view that you must have a proper rationale in not taxing charitable trust in such situation, which has not been done. And one last point which I would like to possibly take is the gold and gold bonds. When you have got listed gold bonds or listed security which is holding underlying asset is a gold, that they have said the conversion period, suppose on the maturity you can get gold instead of gold bond, then that period of holding will be both the instrument, gold as well as the security will be considered to make it long term, which is a very healthy and good provision. I don't see this is a wrong provision. Last provision, of course, I say there are lots of 122 amendments under the Income Tax Act. And in last 3 years, it is the highest number of amendments. And there are a lot of procedural amendments which have been made, which we have yet to digest, and we will work out on that. But only one amendment which I would like to make mention about it is gift received by a non-resident from a resident if he is outside India was exempted. Now it was considered as a deemed income, so it's not exempted. It was considered as income deemed to accrue or arise in the hands of the non-resident. It was taxable here. Now they have extended that provision to even not ordinary resident. Of course, it was their mistake in the past. They have corrected it now.
Okay, that's a very sort of a detailed takeaway. One thing I wanted to revisit from your entire takeaways, and that is REIT. Whether we are talking about the listed stocks, embassy, or the other stocks. But what I was just thinking, just few years back, government was really trying to popularize InvIT, REITs. Then we saw some good successful sort of follow-ups from the companies. Now with this rejig, do you think this was something which was worth doing it? And what actually it would really mean for the sector?
Mean for the sector that they must consider at least at one end it will become taxable. Earlier it was a loophole genuinely. It was taken as not taxable in the hands of the investor as well as in the hands of the REIT, and that benefit has gone away. On the contrary, when you want to popularize the scheme, possibly it was intended to give double exemption to popularize the scheme. Now you believe that it has become popular. I don't think so. So there are so many REITs which are in existence. There are only a handful of REITs. So therefore, still it is not very popular, and therefore to all of a sudden withdraw the exemptions or say that it was taking people are taking advantage, in my opinion, is not correct.
Right. So perhaps REIT is one area. I think even if we compare ourselves to Hong Kong or Singapore, I think we are still far behind in terms of the really taking REIT as a very popular asset class. So I think one point I think which is really brought out by Mr. Oswal. Mr. Oswal, I think you've been kind enough to answer all our questions really in detail. We loved enjoying this conversation with you, and perhaps maybe at some other opportune time, as actually we are still going through so many amendments and sort of into details. we'll perhaps come back to you at some other point of time for really getting some more takeaways.
Thank you very much.
Thanks a lot, sir.
Thank you.
With that, viewers, hope you enjoyed this conversation. It's a wrap on this show.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.